Until recently, China was sort of the economic miracle. It was the one place you went to invest. Now we hear from a lot of investors, maybe not so much, given some slowdown in growth, some uncertainty with the government. Where are you on China right now?
So I think from a growth standpoint, China used to run in a nominal GDP, which is real GDP plus inflation, about 20%, which is a huge number. Today, that's about 6%, so it's down by a third. So when you think about China as the global growth engine, it used to be 1/3 of global GDP growth. It's clearly not that engine there. You know, this is my third trip. I just got back this year, and I've been going since '95, so we do have some compare and contrast. What I would say is I think the story on what's growing in China is actually misunderstood, right? One is that housing, I think people know that it's not growing, and I think that's been well documented. What they're missing, though, is the growth drivers. What you're seeing is a huge growth surge in the decarbonization or the energy transition, and the second is really around industrial automation. Most investors have been focused on consumption upgrades, which is certainly an attractive area, but there's a real shift in the underlying momentum of the economy. I'd say the economy actually bottomed in April. That was my second trip, and what we saw was some slight improvement when we were back there recently.
So as you say, historically, it's been sort of export-driven as well as housing property. Now it's shifting over. You've got the climate change issues, green issues. You've also got industrialization and sort of the modernization of there. Is the government behind that? Because one of the questions always is, how's the government going to come on this? Because the government's shifted on some things like tech, for example.
Yeah, look, I think tech has been well documented, remains a complex area for a variety of reasons, both in the United States and in China. On the decarbonization, that is a massive part of the economy. It's already 10% of the economy. It's growing 40% year over year, and it goes across multiple different areas. Industrial, kind of what I would say is digitalization, that's phase two of the export story that you mentioned. It's really about how do you create automation, right? When I first went to China and China joined the WTO, labor costs were 44 times cheaper than the US. Today, that's 4. And they actually have a negative growth rate for Chinese locals that are in the age group 20 to 50. So they need automation. One of the areas that we spent time learning about was actually robots. Year over year, that's growing 75% year over year, that business in China. Second is civil aviation is growing about 40% year over year. These are not typical industries that China has been affiliated with in the past. I think from a global, we're a global firm. We're very local, though, in Asia, including China, but we've got 8 offices around Asia and about $70 or $80 billion across a variety of asset classes in Asia. And what you need to understand is not only investing in China, but how is it connected? What we see as a local investor is that Asia trade is escalating massively. And so a lot of people think about US-China trade as the only avenue. You're missing the bigger story.
Just as we hear from some investors, we're not as enthusiastic about China anymore. I hear a lot of enthusiasm about Japan. What's going on there?
Yeah, look, our view, we've been in Japan for a long time. We did one private equity transaction 7 years, and then we've done probably 14 or 15 in the last couple of years. A lot of these have been around corporate carve-outs. The final legacy of Abenomics will be that corporate reform is accelerating, and that's leading to big companies, Hitachi, Panasonic, companies like that are starting to look to sell subsidiaries to create growth and value creation. That's kind of theme one where we've been active. Second is we did make an acquisition in the real estate market in Japan, and that's starting to create value, which is can you unlock some of the real estate value that was maybe suppressed in a deflationary environment. And then the third is you're seeing more activism. And I think KKR has really emerged as a kind of a white knight in more of that, what I would say is activist market. So things are accelerating. It's somewhat ironic, which is I used to go to China and people would talk about inflation as a constraint, and then the constraint in Japan was deflation. Now you go to China and it feels more disinflationary, and Japan feels more inflationary. So it's really, there's a real repositioning of global macroeconomic trends within Asia.
Well, that was what I was going to ask. Do you think inflation's back to stay in Japan?
I do. I think there's cyclical and the secular. The cyclical is around food and energy inflation, which I actually don't think is good inflation. I think the wage growth is actually very constructive. And so that's what you're seeing. That leads to more spending. It creates confidence. The offset of that and where we focus as a firm, it's back to this industrial automation concept, which is you need to get productivity gains that allow wages to grow without margins being pressured. And that's what we're seeing. You saw this from the Prime Minister when he was in New York. What did he talk about? He talked about CapEx in Japan was at a record level. That CapEx is going back into creating productivity into a workforce that probably needs more automation, needs more sophistication. So you've got to watch all parts of the economic story together. You can't just focus solely on the inflation component.
So when you look for the economy to grow in Japan, you have to make up for some of the demographic issues and the workforce issues that you just referred to.
Yeah.
Do you think that it's possible for CapEx to be enough to make up for some of the challenges they have with an aging population?
I think one is, there are a couple of things to keep in mind. Japan's done an incredible job of actually bringing women into the workforce. And if you think about childcare costs in Japan, they're 4 times cheaper than they are in the US. That's a massive competitive advantage. Second, they've actually gotten males 55 and older to come back in the workforce, and they're starting to get some small signs on immigration. So we're not looking for 10% real GDP growth in Japan. What we're really looking for is some improvement from really on a nominal basis, which was deflationary, to inflationary, some positive nominal GDP growth, and then we're looking for corporate reforms. And so I think investors have to separate the earnings from GDP. The best environment for KKR is actually, can you help companies grow their earnings when GDP growth is actually somewhat slower, and that means that the central bank doesn't have to over-tighten. And that's really what you get in Japan. I mean, our founders, Henry Kravis and George Roberts, say internally, they pioneered the private equity business. And they said, if we were 22, we would go to Japan right now, because that's actually where you're seeing some of the real movement and creating some opportunities in private equity.
That's saying something. One last one, India. We hear a lot about a boom coming in India. Obviously, they don't have that demographic problem that we talked about with Japan.
Yeah.
What's going on in India?
India, there are 2 things that are going on in India. One is the exports are actually picking up, and some of that is you've seen some reshoring into India. So when you look at their export momentum, it's actually quite strong. And then second is, similar to Japan and similar to China, there's a global CapEx cycle where they're seeing their infrastructure investment in particular go up. That's a big deal. One of the big hindrances in India has always been that they haven't had the infrastructure. And under Modi's leadership, they're starting to see that occur right now. So there's definitely, that's got more of a positive investor sentiment around it. But there's some really important secular drivers going on that we see in India. It's not just the demographics. It's that some of the big companies are expanding into infrastructure, creating more opportunity set, and then you're getting more of a consumption upgrade cycle as GDP per capita goes up in that country.